Hi there, it's Professor Liam. We're looking at the Chapter 2 homework podcast here. And one of the things I like to do is cover as few problems as possible that deal with a lot of the different things that you had to do on the assignment. This one, problem number 10, really just about covers everything else we did in the chapter. So to get started, we're looking at this Boilermaker house company that paints, and they incurred the following transactions for September. This means that when we read these, we're going to have to do journal entries. So in the first one, they paint houses during the current month for $20,000 on account. So when they go back and record them, they're going to debit accounts receivable $20,000 and credit service revenue for $20,000. On September 8th, they purchased painting equipment for $21,000. And here we have one asset going up, equipment, with a debit, and one asset going down, cash, for $21,000. On September 12th, transaction 3, we're told that office supplies were purchased on account for $3,500. So here we show supplies going up $3,500 and accounts payable going up $3,500. Notice that we didn't pay cash in this transaction. On transaction number 4, we have a salary expense. And in this case, cash was paid, so it was relatively easy. We're going to debit salaries expense $4,200 and credit cash $4,200. Well, I was paid once in a job many years ago in cash. It wasn't under the table. I worked at a large retailer, and every Friday they gave us our check through the week. But this is uncommon, and that was many years ago. It's even more uncommon now. Ordinarily, when somebody's paid or somebody works, they're not paid immediately. And we talk about this in the Chapter 3 podcast that you'll also be able to see at the same time you see this one. And we said that even if cash isn't paid, we have to record the transaction as soon as the person works. So we might well have a debit to salary expense and a credit to accounts payable in that situation. So now I want to turn to the general ledger part of this. Not time to get through all the journal entries in a few minutes. So notice that some of these have shown up in the general ledger accounts. For example, we saw the transaction on the 8th as a credit in the general journal, and here it is going over to the general ledger as a credit. Notice it brings the balance down from $46,100, which is a debit balance, by $21,000 to $25,100. Notice also to the right that we have the debit on September 3rd to accounts receivable for $20,000 in accounts receivable, and this brings the balance up to $21,700. The next two accounts, one of them is for supplies on September 12th, and that brings that one up by $3,500, and one of them is for equipment, and that brings that one up by $21,000. What I hope you're seeing here is that unlike the journal entries, the ledgers aren't two-sided. So after we record each general journal entry and we have debits to accounts and credits to accounts, we find those accounts here on the general ledger and we record there. And then when we're finished with a month, each of these accounts will have a final balance. Notice, for example, that the cash balance is $36,500. Notice the accounts receivable balance is $6,700. Notice the supplies balance of $4,000, the equipment balance of $28,400, accounts payable balance of $4,700, deferred revenue balance of $6,000, and watch what happens on the trial balance, the last thing we do. So I've mentioned in other places that I think this is a misnamed statement. It comes by the name, honestly, because before computers, when an initial trial balance was prepared, it almost certainly had clerical errors in it, which is why they called it a trial balance. But these days, really, a better name for it would be a list of accounts with its balances. And if it were the final one, or the one we used to prepare financial statements, it would be called an adjusting trial balance. Look at those first four entries that you see here: cash, accounts receivable, supplies, and equipment. And notice that these are the ending balances from the general ledger that you saw in the previous part of this problem. Also notice that at the very end, the totals have to agree. Take care.